So what do you get when a new Fed chair nominee rattles metals, props up the dollar, and tech stocks start to second guess the AI party? Well, you get a market session that went from champagne celebrations to asking, well, who ordered the fire extinguisher? And it did so in record time. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today we are unpacking a powerful macro theme that rippled across currencies, metals, and equities, which is, well, the nomination of the new Federal Reserve chair, and how that single decision has sent shockwaves through the market. Think of today's session as a reminder that fundamentals don't politely knock. They just kick the door in. Let's start today off with the elephant in the room. The US dollar index remained above 97, extending gains after rising roughly 1% in the prior session. The catalyst? Well, the US president nominated Kevin Warsh as the next Federal Reserve chairman. Markets are interpreting Warsh as a more disciplined and hawkish figure, particularly when it comes to reining in the Fed's balance sheet, maintaining tighter control over liquidity, and approaching rate cuts with more caution than previously expected. Even though traders are still pricing in 2 rate cuts this year, the message from the market is very clear. This isn't a cut fast, ask questions later Fed. Add to that a divided FOMC, firm producer inflation, and improving US political stability after lawmakers reached a spending agreement, and suddenly the dollar found its footing once again. And when the dollar wakes up, other markets start to feel it. Let's kick things off today with currencies, and starting with the euro. The euro ended January near $1.19, notching a 1.5% monthly gain and sitting close to a 4-year high. That strength came from broad US dollar weakness through most of January, some solid Eurozone economic data, and improving growth figures across Spain, Germany, and Italy. Eurozone GDP expanded 0.3% quarter on quarter, beating expectations, while unemployment edged lower to 6.2%. However, and this is the key shift, the Warsh nomination changed the tone. The renewed strength in the dollar has started to weigh on Euro USD sentiment. The ECB policymakers have already hinted that excessive Euro strength could reopen the door to rate cuts. In other words, the euro just sprinted ahead and now it's checking if the road is still clear. Looking at the charts, Euro USD is currently trading around 1.185, but that tone has softened. Key levels to watch at the moment is as follows. Support is currently at 1.181, below that 1.173, followed by 1.157. Resistance is currently at 1.197, followed by the January high at 1.2082. Momentum indicators are rolling over. The MACD histogram has slipped below 0, as well as the stochastics has fallen below the 20 level. However, that doesn't scream panic, but it doesn't suggest that the upside momentum is no longer on autopilot. Moving over to commodities, and well, let's talk about the market that stole the headlines, and not in a good way. Silver experienced one of the most dramatic reversals in recent history. After an extraordinary rally that pushed prices to record highs above $120 an ounce, silver just collapsed. 26% down on Friday, its largest one-day drop ever, followed by another 10% decline on Monday, falling below the $80 per ounce level. What's the trigger, you might ask? Well, once again, the Warsh nomination. Silver has benefited from the debasement trade, concerns over government debt, fears about Fed independence, and strong momentum buying, particularly from Chinese speculators. But when expectations shifted towards tighter liquidity and balance sheet discipline for taking arrived, and it did so fast and violently. This wasn't fear selling. This was crowded positioning, heading for the exit at the same time. Looking at the charts, silver is now trading near $76.50 an ounce, well off its January highs. Despite the sharp pullback, however, silver remains up over 140% year on year and still posted a small gain over the past month. Near-term support is now sitting at $73 an ounce, followed by the 78.6 Fibonacci level, which is at $62, and then the $55 level. Near-term resistance is currently at $84 an ounce, followed by $95. So from a price action perspective, this move, in essence, resets the entire structure. So what's our takeaway here, traders? Well, it basically just states that momentum trades work brilliantly until they don't. And when they unwind, they do it without warning. Let's shift over to equities, specifically tech. The Nasdaq 100 fell 1.28%, with indices continuing to slide as markets digest a packed earnings calendar, growing skepticism around AI investment returns, and tighter financial conditions under a potential wash-led Fed. Earnings from major names like Alphabet, Amazon, AMD, and Disney are in focus, while reports that NVIDIA's proposed $100 billion OpenAI investment has stalled, reigniting concerns around AI valuation. Add to that Friday's US jobs report that is looming. Yes, NFP is coming up on Friday. And suddenly, risk appetite looks a little less enthusiastic. The mood shifted from growth at any cost to, let's see the receipts. Looking at the charts, the Nasdaq failed to hold its breakout above 25,500, with certain key levels now in play. The decision point is currently that 25,100 level, below that 24,700, and then 300. Resistance is currently at 25,500, followed by 25,900. This is in essence now a rotation market, not a breakout market. So the key question here is simple. Is this a pause before another attempt higher, or the start of value migrating lower? So as we head into today's session and the start of a brand new week, here's what to watch out for. Will the dollar's rebound extend as markets recalibrate Fed expectations? Will metals stabilize after one of the most aggressive profit-taking episode in years? And can tech regain confidence? Or does this earnings season expose cracks beneath the AI narrative? Tomorrow, we'll see whether this was just a sharp reset or the opening chapter of a broader shift in market leadership. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX.com and well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.